Hello everyone, this is Mark Leibovit of the Leibovit VR newsletters, and this is an introductory tutorial here on Tradestation for the Leibovit volume reversal indicators. You may have recognized me as one of the 10 elves on the Louis Rukeyser Wall Street Week television program from the 1980s and 1990s. You may have seen me on the Nightly Business Report. I was a market monitor guest for 30 years with Paul Kangas on that program. Timer Digest ranked me as a #1 market timer for the 10-year period from December 1997 to December 2007. Here at the Leibovit VR newsletters, we offer a silver newsletter, which is a daily commentary, the platinum, which provides individual recommendations. We also have our Leibovit VR gold letter. Our annual forecast report comes out once a year in January. We're about to launch our new Vice letter looking at cannabis stocks and others in the Vice area. And we have our Trader's Book of Volume, which was released in 2011 through McGraw-Hill. It's about 500 pages, covers most of the major volume indicators. Greg Morris introduced it. It was a labor of love. We do discuss the VR in it, and I'm very excited that it has just been recently translated into Chinese. So on my next Asian trip, hopefully I can talk about the VR in that part of the world. The Leibovit volume reversal is a proprietary algorithm that signals volume shifts from buyers to sellers and from sellers to buyers. It's usually formed when a rally day is followed by a reaction day on more volume, or when a reaction day is followed by a rally day on more volume. We've created 3 versions here on Tradestation: the sequential, directional, and 2-day. Here we're looking at the sequential. In the sequential, we post all the Leibovit VRs, and if there's a series of them and no intervening negative VRs, we count them, as you see on the screen, from 1 all the way up to 7. You're looking at blue bars, which are rally days, yellow or orange bars, which are inside days, red, which is a reaction day, and green, which is an outside day, lower low, higher high. The theory behind the volume reversal is that if you generate a positive VR, the low preceding it is your mental stop. A negative VR, the opposite would be the case. You can decide how long you want to stay in the trade. It's a complementary indicator. You can tie it with all other indicators that you may currently be using. I use a couple basic indicators, and I'll show you in a later example, but for the most part the VR is my trigger and signal, and I'm very partial to the sequential that you're seeing here because it shows all the VRs. We created the directional version, which filters out repetitive VRs. So in this example, if a Leibovit negative VR is formed here, until a positive VR is formed, we don't show another signal. We also added here it's a brown line, but on the actual screen it's a dotted line, and that's your mental stop. How does that work again? Well, as I mentioned, if a Leibovit negative VR is formed, your stop is the top of the bar preceding. Conversely, if a positive Leibovit VR is formed, we generally use the low just below where the VR was formed, the bar preceding, because the theory is if sellers came in here off this top, the momentum should have begun to the downside, and if buyers came in here, momentum should be to the upside, and this low here and this high here should hold. We created another version, the 2-day version. It looks real complicated on the screen here, but it really isn't. In a nutshell, we did a study years ago that when a VR is formed, negative or positive, you tend to get follow through in the direction of the VR for about 2 days. So what we did was we created a version that said here, for example, if a Leibovit VR is formed, your stop is here, which is where this little line indicates. 2 days later you're out of the trade, and we put a little blue dot there just to signal the 2-day time frame. Again, my focus is 2 days, but with Tradestation, as you know, you can switch into any time frame you want. You have to test all these other time frames, 5-minute, 15-minute, weekly, monthly, and see how they work in your particular trade. For the most part, I focus, as I said, on daily, but there has been reliability in other time frames. So here, essentially, a 2-day just giving you a blue dot and telling you when you're stopped out with a little X and a little blue circle here if a stop does occur. So just giving you a little bit more information, but basically signaling the 2-day. What's really great is the availability of a watch list. And here you can create a watch list as you see on the left side of the screen. Here I just entered a bunch of stocks that I tend to trade and follow, mostly the Dow 30 names. And if you see a VR, that means in the recent time frame, could be last few days or a week, depending what time frame you're on, a VR was formed. But most importantly, if you get a little P here after a VR, that means it's happening right now. So here on this example, we put INSY on the screen, which is Insys Pharmaceutical. And in this example, a VR was formed in the current bar in the current day. I suggest you get live data so that you see it as it's occurring during the session. You can take advantage of it. Again, the watch list can be set up in any list that you want to create, and both negative and positives are formed. It also gives you a count here, like in this example here, you're looking at Home Depot HD, negative VR 4. It means there were 4 negative VRs formed in HD. It could have been over the last several weeks. It doesn't mean it happened in the current bar because you'd have had a P there, but it says that there's been more negatives as of late, and that's important information. Here are 3 examples of the North American Palladium PALL using the sequential, directional, and 2-day. So let's go back to the sequential. As you can see, it's posting all the VRs, what I've done here, and you're welcome to use other indicators you prefer, but I use a 533 stochastic. I just put up the basic volume bars just for reference. I put up a green 200-day moving average and a blue 50-day just for a point of reference, but essentially the VR is my signal. I'd like to see the momentum in the direction of the VR, okay? So I tend to want to trade a negative VR when the 533 is going down rather than when it's going in the opposite direction. So that just as a general guide, you may want to use MACD or other momentum indicators, but I like to use a 533 stochastic, and I put that up in all my charts. As you can see, there really isn't anything else up there because really I'm keying off the VR. Here's the same chart for PALL with the directional. So what we've added here is those dotted lines, which is your mental stop. So in this example here, I'm circling a leap of a negative VR was formed. You would be short. You've got a topping downtrending stochastic, and your stop would be basically the high of the bar preceding. In this case, I suppose would be this high here on this outside day. And that just gives you the trade. If you were a 2-day player, it would be out in a couple days, which I tend to do, by the way. That's why I created that indicator. And for some reason, if you are stopped out, you know, a little X is provided here for you as a guideline. I don't hang around that long, and if, for example here, let's look at an example here, you have a positive VR. Now I probably would not have taken this trade because my momentum indicator was in a downtrend. But if you were in that trade and your mental stop was right here, the low preceding that VR, and you stayed with it too long, you'd have gotten this little X signal telling you were stopped out. Of course, a negative VR would have come in, and that would have been your trigger now for another trade with these dotted lines as your stop relating to this little high point here. So let's move on. And of course, you've got the 2-day, which I showed you in the example prior. It's the same chart again of PALL, and all we've added here is little blue dots telling you that 2 days following the signal you should take the trade. If you believe our analysis that says that generally in 2 days that's a good time to exit the trade. So in summary, we looked at the 2-day, the directional, and the sequential. Here I encourage you to sign up. There is a free trial available. The Leibovit VR is a very powerful tool. It's simple and powerful. I've used it for 35 years. Again, you can tie it in with any other indicator we like, but I find that it leads most other indicators because it's triggering the moment that volume is coming into the stock or index or commodity. This is when smart money is moving, and it's very important to me, and this is why I've been so successful over the years with the indicator, because I'm not questioning news. I'm just looking at the volume and seeing that change of momentum. Have a pleasant day. We will have other updates for you periodically here on Tradestation. Thanks for checking in.